Hey everyone, Nick here looking at CGC, Canopy Growth. Maybe I'll look at other pot stocks if we have time. So I've been updating us. I don't trade them, but I do keep track of them for friends. I did issue a few alerts whenever I was able to. Some triggered low and then flipped. This morning CGC, well today is what, 114. Yesterday I think it had a good day. I didn't think it was going to have two good days back to back. It's been rare recently, but after a pre-open that was iffy, it flipped. I think APHA announced pre-open. I didn't even look at what they did. So it was down 9% and CGC was up. That's good news. I think Tilray was up on some C-suite changes, or updates. I can't remember what it was. So the point with Canopy was that it had potential. First of all, it's supposed to be the best of the, as far as balance sheets are concerned. That's the perception. I can't verify it. There may be some off-balance sheet stuff that I don't know about, but that's the perception. They should have some money left over from STZ. It's Constellation's investment into them. Some of it is committed somehow above my pay grade. Back to the chart. I've been updating the fact that it had a few upside potential breakouts and a lot of them failed. So this one looks like it's unfolding. I don't know where people draw the necklines. All I know, like inverse head and shoulders, cup and handle, whatever they track, it overcame a past failure point. Thereby, I call it a neckline. This sticks out 22.3-ish. So once that's taken out, it leaves room for, it invites momentum buyers. Okay, so they took out the last fail, they come back in. But there's more than one. Here was one that was very violent from recently, the second, and it was at 2164. So all these were alerts that I had set for myself. So now what? Is it too late? Well, eyeball, it's already priced in a lot of the upside, plus it's 30% almost from just a few hours ago. So clearly, a lot of the easy work has been done. So where are we at? Right now, CGC closed at 2385, which is exactly a past failure point and a neckline. So they tried to hold that line for a while. You can see that candle right there back in September of 2019. It had a very long doji, a doji with a long tail. So they tried to hold 2380-ish back then and failed. And they've never recovered it. This is the first time they're back at it. So if I'm not long yet, I want to see what happens. So when do I put my triggers? The easy stuff, this is way past. I could try to be surgical with these levels. But I think the better line would be to look at more recent. So this is a 15-minute chart. So this was a violent tail that they priced out. And this was a violent tail. This was a nice hold. So worst case scenario, the tightest lines I would use as triggers is clearly just above the way it closed or above 24.4. and or below 23. So if I were a fast trader, I would set an alert to tell me, uh-oh, or to tell me, hey, you should start looking at it. So these are two tight ones. If I wanted to, I'd use these edges right here at 23.5 or 4 and 23.9, 23.95, 24. So it all depends on how fast somebody's trading. Some people trade real fast with a lot of shares, that would be it, or some call activity. To me, 15 minutes is plenty fast. 30 minutes kind of gives me some clarity. So now, here's the thing. So what's going on with this? This box right here. Ooh, this is white. Okay, so this is a box I want to pay attention to. If I had one candle to watch, I'd look at this range right here because it is pretty violent. And I'd want to know why. That's my opinion. So I'll keep a box for visual reference, but the story in CGC is it's in a breakout heartbreaking finally, right, for whoever been stuck trying to anticipate it. But they're not out of the woods yet because they did the same thing. This is a daily chart. Boy, that might be hard to see anything here. Yeah, I don't like it. They failed back in September from exactly the same point right here. So the breakout is ongoing. If somebody's not long yet, they better be surgical with the entry. How surgical depends on how fast the trader, but we just put these two orange lines. So this is just CGC. APHA down 9%. Is it catch the falling knife type of deal? I don't know. Let's look at it. I don't want to turn this video into a long... Okay, so the neckline that they just cleared for this big rally was here at just under 4.9. They tested it for 4. They are testing it for a floor on a headline. So this is legitimate test on earnings headline. So if I'm still long and I didn't get out, I wouldn't get out until they lose it again. What is that? That neckline right there. If I look at it, it's a very pointy level because of what happened here in the past. So I know they say we don't have crystal ball, but in this case we do. Ledge and then fell apart. So this is proven resistance and then breakout, proven support. So I can safely assume, I can assume until proven wrong that this is going to be support. So if I'm long from here, I don't get out here, I see what happens. And if I'm looking to get long, maybe at the first sign of I take a long, maybe at the breakout from this descending trend line for a swing trade, but with a tight stop. And let's see if I can come up with a few numbers on this one. So we are at 15-minute increments. Yeah, this is pretty tight enough. So if I wanted to, I'd put an an alert at 510. You know, this would clear the descending lower high trend. Like if I draw a line here, lower high, 510 would have cleared it and would be clearing the level from another pointy level from which they recently failed, which is as recent as 114 today. And if I were to bug out, my stop would be somewhere here. So it would be a really tight entry and really tight exit. It's like it's a trade. Some people will move it down to here because they're okay, or maybe even to here because they're okay seeing some red. But in this case, I mean, it's a little red. It looks like pennies, but in relation to the stock price, it's probably a big move. So, 2, 3, 4, 5%. If you're playing options, that's inflated. So a move of 3 or 4% in the stock price underlying is inflated, 10 times estimate in the options. So I'd pay attention to that. Tilray. All right, I guess we're going there. So Tilray had a good day. This is a 2-hour chart. So you can see headline came out, I don't know exactly when. And it hasn't seen a rally like this in a long while. Well, in a recent while at least. So since last October at least. So is this a time to pile in? Not for me. This was an area where it had consolidated, so it has people that want to fight over it here. So if I'm not long yet, I wouldn't get long. Where do I get long? A clear line would be above this. So I'd want to start looking at it here. And this being, for those who are listening and not watching, 23.9, let's call it 24. There's this failure just a little bit above that, 25.70. I say a little bit, but it's $1 and change, so it all depends on how fast a trader I am. GWPH, that's the last one. Whoops. Gotta hit the gym. I'm back fighting again. Okay, so, So last time I did a video, I know I drew these lines. And I said we have higher lows, lower highs, coming to a point, something's going to happen. I don't know which way it's going to go. Same here. They were trading inside of a shorter term zone. Either this or that will happen. Guess what? Both did. This, then that. So they touched the this and they got to the that. So is this a good entry point? Heck no, not for me. Not until they show me that they want this gap. So to me, in my experience, this gap... Wait, they reported already? Okay, even better. So this gap is earned by the bears, meaning they had reason based on earnings to sell it down. Boy, I need to double check the day they report. So if they have reported, then everything I'm saying here stands. If they have not reported, then it's a coin flip next. So this cluster tells me that they're hesitant to take this gap fill. So I wouldn't chase it until they at least start it again. A good company, I just talking from trading perspective. And if I wanted to see if I wanted to short it, I just want to know what's going on if it goes below 116. So 116, 120 is a tight trade. If I go to 15 minutes to see if I can gather some intelligence, that's a pretty good rejection right there. They're trying to test it. So let's see what happens the next couple of days. This is probably aggressive. I'd want to lower it. But, it's in the hands of the buyers on the 15-minute chart. So dips should be buying opportunities. So I don't expect the complete fill of this right away without showing at least a bias to where, okay, now it's in the hands of the seller. How do I know that? To meet my eye, sometimes somewhere around 116 or lower, then the sellers will start selling the rips. So if it starts doing this, then I sell that. This is when I say, this is what I say, it's in the hands of the seller. So every pop is a chance to get out, not a chance to, okay, this is the big bounce type of a deal. Right now, the dips are buying opportunities. At least they're not reason to get out. So the dips are part of normal price action because the buyers have it. So they're going to do boom, 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 and the breakout, continue the breakout. So far, so good. Pending the outcome of this box. Another box. Yep. Lines and boxes. Well, they serve us well, so we'll continue to use them. All right, next signing out. Leave comments, spread the word, share the video. I do, almost cursed. Crap ton of work. Give me some love. Later, bye.